We have discussed the importance of just-in-time manufacturing, or just-in-time when we talk about services. And obviously, you are going to be extremely limited by your ability to do stuff as quick as possible. That is why it is especially important to have a sound understanding of theory of constraints. And yes, it was started in CIMA P1. And yes, some of you have exemption, meaning that probably you have never heard about it before. So how about we revise? What is throughput? Throughput or throughput return is sales revenue minus direct material cost. They are also referred to as throughput contribution. What is important to note is that in theory of constraints, in this throughput formula, when we calculate contribution, throughput contribution, we use only direct material costs. We do not use all of the variable cost. We ignore labor, we ignore variable overheads. Why? Because it is expected that in short term, only material costs are variable. Well, actually, this is how it works, because you cannot ask a person to come to work and just work for 20 minutes. No, you need to hire them, you need to pay them salaries, so they are in fact fixed in short term. Yes, obviously, if your volumes are going to increase or decrease, in long term, you will be able to hire more personnel or to just let some people go, but not in short term. As such, we will need to understand what throughput return is by taking sales revenue and subtracting just materials. Theory of constraints is defined by CIMA as a procedure based on identifying bottlenecks. Bottlenecks are our constraints. So some process that is the slowest in the organization. We will try to maximize the use of this bottleneck, and we will try to subordinate other processes so that the speed is aligned with the bottleneck. We will try to maximize the output per bottleneck, and once we've done that, we will reevaluate the system to identify the next bottleneck and work with the next bottleneck. Okay, so imagine we have a service organization and we are producing reports, and these reports are going to be translated in, let's say, English language, because we are located in some other country and that statutory language there is different. So if you find out that your translators are not as quick as the rest of the organization, and they are the process that limits your ability to produce more reports or more researches, more reviews, whatever you are doing, then this means that this translator department is a bottleneck. You will try to think about how to stretch this bottleneck. Maybe you are going to hire an additional translator. Maybe it's not really viable because you anticipate that we just having a peak and the demand is going to decrease in the future and we do not need an additional personnel. So instead, what you can do, you can reassign tasks. So for example, it's some other department that makes a template. They do some translating, this lower level translating, and translating department works with that, with this draft, and just reviews and corrects it. And this means that translating department will stop being a bottleneck and some other department or some other process will become a bottleneck. Well, for example, those people who go on locations, talk to the client, discuss how the processes are going. So we will learn that they are bottleneck. We will try then to try and stretch this bottleneck. So for example, it takes them so much time because they travel by public transportation. So instead, we will offer them to use taxi services so that they can come to the client faster and as such serve more clients. So this is how theory of constraints works. Now, bottleneck, again, is a facility that has lower capacity than preceding or subsequent activities, either preceding or subsequent, and restricts output based on current capacity. No, sorry, not either, but both preceding and subsequent activities, meaning that we are looking not only at something that comes before, but also something that comes after. And throughput analysis that we're going to make takes sales revenue, subtracts direct material cost to get throughput contribution, and then we divide it by the units of scarce resource that are needed to produce this unit. So we will try to subordinate our products based on how much throughput contribution is provided for every unit of limiting factor, of limited resource, of our bottleneck, hours, kilos, and so on. Limiting factor analysis is a little bit different. Limiting factor analysis, that is not the question right now, is sales revenue minus all of the variable cost, and we will divide it by unit of scarce resource. So once again, what is the difference? The difference is that throughput analysis considers that everything is fixed except for materials. Limiting factor analysis considers that variable costs are not fixed, they are variable, and therefore we should account for them. Throughput analysis is great when we're talking about short term. Limiting factor analysis is great when we talk about something that is not very much short term. You do need to remember formulas that were given to you in P1. Once again, they are as follows. Throughput return per factory hour. We take throughput return per unit, throughput return once again, sales revenue minus materials, and we will divide it by hours to produce 1 unit of bottleneck. Why do we need to calculate this throughput return per factory hour? Because we want to see what is the maximum contribution, throughput contribution, that we can earn at each and every hour. So we will divide by hours that are needed to produce 1 unit on bottleneck. Now, throughput cost per factory hour is calculated by taking total factory cost per period and divided by bottleneck hours per period. We say total factory cost, and this are all costs except for direct materials. So we will have fixed overheads, we will have all the labor, all of the overheads that are normally named variable. They're going to be called conversion costs. Throughput accounting ratio, TA ratio, is when we take throughput return per factory hour and divide it by throughput cost per factory hour. So if you are able to generate more contribution than you have costs, so if your TA ratio is above 1, this means that you are doing great in terms of this product, and this product should be kept. If this TA ratio is below 1, this means that you are not getting as much as you are spending, and this product should be abandoned. And if we want to decide what to produce, so which clients we should say no to, we will need to rank these TA ratios. And the ranking of our TA ratios will allow us to choose those product, the order that gives us the highest throughput contribution. And in your formulas, you are going to have to face hours. Hours can be labor hours, they can be machinery hours. So you will have set as a bottleneck either labor hours or machinery hours. So these are the formulas that you are supposed to remember from your CIMA P1 studies. And then we have a bunch of practice questions. How about you try and do them on your own, and then go to the next video and check your answers.